And it's Cash Flow Podcast time again. And we're going to keep it simple to answer some of the questions that we get on a regular basis. This question's a really good one because a lot of people have read Michael Michalowicz's excellent book called Profit First. I've told Michael on a podcast that he was on my podcast at one point, and I said, Michael, I love you and I hate you. Number one, you figured out how to write a book for entrepreneurs that made it very easy to understand how finances should work. And finances should work that I pay myself first, and I have all the money I need for all the expenses I need. Great book. And it recommended, if you've read it, that you have separate accounts for a few things. And a couple of the things you want a separate account for, he says, is taxes. And the other one is savings. I think it is the one, savings. The other one. But there also, in his recommendation, there's an account for payroll, there's an account for taxes, there's an account for savings, there's an account for paying yourself, and I think there's a fifth one. So I take a little bit of an exception to that. And I'll tell you why. Because I've worked with Profit First clients. And when people try to do Profit First very early in their business, when they're not making a lot of money, they have money come in and they break it out into all these accounts. And then 5 minutes later, they're like, oh shit, I need money in this account, so I have to move money over. And oh crap, I need money in that account, so I have to move money over. So all of a sudden, all their time is spent just transferring money around their checking accounts. And that's not a good thing. So that part of what he recommended, I don't necessarily agree with for businesses that are starting out at the very beginning. And because it takes a lot for a bookkeeper to unwind, you have to pay more for bookkeepers when that happens. Instead of managing one account, they're managing 5 accounts, and 90% of the transactions they're managing for you are you moving money back and forth. So there's no value to you, and you're paying them to do it. And I'm like, well, that doesn't make a lot of sense. But what do I think? I absolutely think you should have a separate account for taxes. And in every business I have a separate account for taxes. So we talked about this a couple of episodes ago, that in order to not get a tax surprise, what do? Well, you put money away for taxes all throughout the year. It's going to be your biggest expense when you're profitable. So yay, you're profitable. Boo, you have a high tax bill. But putting that money away in another account where you can't touch it. Pretend it's a 401k, pretend it's an IRA, pretend it's your savings vehicle to save for your house or to save for graduation or school bills or paying your old debt, whatever it is. Just put it away like it doesn't exist. So absolutely, I agree. Separate account for taxes is good. But what I would tell you is, then don't touch it. It should not be an account that you ever put money in and out of. It's like it doesn't exist. So if you run out of money in your business, if you're getting poor in your business, if whatever's happening in your business, you need to go through some of the other techniques and tactics that we talk about in these Keep It Simple videos to deal with that. And you have to deal with it as if that tax account is not even there. And believe me, we've been through a couple of tough times in a couple partnerships I'm in. We've had to really lay down the law with some of the partners who are like, well, we got money sitting in that account. Can't we use it? And, the CEO will go, no, we can't. That's not what we're going to use. We're going to keep it in there, and it's going to help pay the taxes at the end of the year. Because one thing I will reiterate every time I get a chance to is whether you take money out of your business or not, whether you pay yourself out of that business or not, you're still going to get taxed on it if there's income. So rule number one, set that one aside. If I were going to set a second account aside, it would not be the profit account, which is the one that pays you. And the reason I say that is every single time I've seen it done, it's the first account that's dipped into as soon as you need money. So it becomes this profit account, which feels really cool when you put the money into it, but then you're beating yourself up every time you have to take money back out of it. So unless you're rolling in cash and you literally can put the money in there and never touch it again, I wouldn't worry about setting that one up yet, but then I'd go ahead and do that later. The payroll account, it depends on you. Okay, a lot of people will say, I want to automatically put into another account the money I'm going to need to pay my payroll. And if you're not able to, for whatever reason, know that I need to keep this minimum balance in my checking, in my normal checking account every week, every month to pay payroll, if that's not something that you trust yourself to do, then absolutely set up that separate account and put the payroll money in it. But my very simple answer to this question, do I need multiple accounts, is you don't need them. It's a good idea to have them, But it's only a good idea to have them when you have enough money coming into your business that when you put money in them, you don't take it out until it's for the thing that account is for. You don't take your tax money out until it's time to pay your taxes. You don't take your payroll money out until it's time to pay your clients, your contractors or your employees, and you don't take your profit money out until until it's time to pay you the profit or share your profit with your employees. So that's my advice on that one. And it will save you money because every bookkeeper who has to do those multiple accounts, like I said, is going to cost you more just because there are more transactions that you have to pull into your business. Okay, so that's that. The next question I had today is, what's a burn rate? And I think I've touched on this before, but I want to make it really simple. A burn rate is how much cash you burn in a month. So if you made no money at all in the world and all of a sudden your revenue disappeared, how much would it cost to keep your business running in a month? And that's called your burn rate. So if you'd have to pay utility bills, if you'd have to pay for your software, if you'd have to pay for your employees, you have to pay for your travel. Maybe travel is a big part of your marketing plan. You have to pay for your marketing. What are all those expenses and how much do they cost on average a month? Very simply, that's your burn rate. I think a second question to that is, why is it important to know? It's important to know because that's the number that you want to multiply by 3 or 6 or 12, depending on how conservative you are. And that's the number you'd like to have saved away in an account somewhere for emergencies, 3 times that. So what that basically would mean is if your burn rate is, $20,000 a month, you're going to have to pay those expenses every month, then what you want to have put away, regardless of whether you make revenue or not, you're going to have to pay those every month. What you want to put away in savings is enough to cover those 3 months of that expense or 6 months of that expense. And that's really why that burn rate number comes up. It's just a fancy word out of finances that I hear tossed around a lot for how much money you spend each month. So that's really all there is on burn rate. And we ready to tackle one more question here, or one more question? All right, these are quick ones. So I love this question. What if I feel dumb asking about this stuff? And I hear this from so many people. I was just helping a woman yesterday with something that she needed to get done in order to apply for a prize, for a grant of $20,000. And we were working together to do a cash flow for her. And she's like, I feel so dumb that I don't know this already. I feel so dumb that I couldn't think to put this together. There is no dumb question for a discipline like finance or accounting that you weren't raised in. We didn't teach this. We didn't even teach personal checkbook or automatic transfers or how to save for your college future or anything to you in high school, in college, or on the streets, wherever you got your education. Whether you got it coming up rough on the streets, whether you got it in the most elite college in the world, or whether you came right out of high school and went into trade. Nobody ever got educated on this stuff. So the absolute answer I have to that is you should never feel dumb asking a question about these finances, no matter how simple you think it should be. Because generally what I can tell you is the people who think they're asking the dumbest questions are asking the smartest ones. Because a smart question is one that tells you what you need to know, to get you an answer that you need to know to move forward in your life or in your business. So there you go. There's no dumb question about finances, and that's not just a saying here. There really is no dumb question. Goes right along with when I tell you, you probably think you've got the most embarrassing money story there has ever been anywhere in life, and you're dead dog wrong. 98% people you look at in this entrepreneurial world have an embarrassing money story. It basically should be in the job description for us, and yours is not the dumbest. I don't know that I've met the dumbest. I don't think there is a dumbest because nobody was taught this stuff. So there's my keep it simple. You're not a dummy. When I say keep it simple, stupid, KISS, we actually changed the last word to keep it simple, squad, because I wanted to make sure that the stupid wasn't interpreted as you are stupid and keeping it simple. I need to keep it simple, stupid. I've got somebody behind the camera waving at me whenever I start to get complicated with the answers because we need them to be simple. So that's it for this week. 3 good questions, 3 simple answers. just want you to know we dive in a little more deeply on these. We still keep it simple, but we have a Keep It Simple squad that you can join for $100 a month. Stay as long as you like, get as much as you need. If you have one question you wanted answered, join for a month. Pop in there, we'll get you the answer and you can leave. We also are going to give you tools and stuff that you can take out and use by yourself ongoing. But the cool thing is, I'll be honest, when people come, they tend to stay because we build a bit of a community in here and people start to learn in real life. There's no stupid question. And a room full of entrepreneurs getting finance question answers also can feed each other and help an awful lot with each other's businesses. And the coolest thing about this club is we've done this once before. I've just seen people start giving each other business because they hit it off, they understand each other, and they need each other. So if you're interested, hit the link below. Join us in the Keep It Simple squad. We're really looking forward to giving you another Keep It Simple tip next week on cash flow. Hit like, hit subscribe, share it with your friends. Anybody you think might think they have a dumb question about finances. Take care.